Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's update our view on the gold market. So if on euro currency today we still have few patterns on the intraday chart, so something to trade, something to watch. On the gold market, most important thing stands on the daily, although few moments exist on the intraday charts as well, but I suppose that the major patterns should come from the daily chart. So take a look what we have in fact. So when yesterday we've got some upside action, and we said that, well, don't be too inspired with this action, just because it might be short-term reaction on the events that's going around the debt sale. And first we see the reaction on the achievement of the agreement. Now we see reaction on the problems with the searching the compromise between the two parties in the Congress. So it's really shaking the boat on the gold market. But if we will take all this stuff aside and just watching on the technical side, you could see that potentially we could get double repo pattern here. So at first glance this action is very small, but in fact it's sufficient for a Jordan Napoli pattern. It has minimum required number of candles to the downside. We have closed above the 3x3. Now take a look, market is forming the bearish grabber. This is still a question whether we will get it or not, but if we will get it, the grabber suggests taking out of these lows, and it means that we get simultaneously drop below the previous lows and close below the 3x3. So of course it might be just direct downside continuation, this also could happen, but since the pattern still might be formed, we should consider this possibility as well. So you could say that the thrust is small, but take a look at this one. Here is also thrust was relatively small, but we've got the double repo and it has worked very nice. So something that sort also might be formed. We do not know what will happen tomorrow on the payrolls and what really will happen with the debt sale agreement. Something tells me that we're not out of the woods yet, so we will see. But this is definitely the pattern that makes sense to consider. On the lower time frame, let's take on the 4-day from chart, a few moments to mention. First of all, I would say that this overall performance, it's a bit, not typical when the market is forming a reversal. It's just because we recall what we said previously. That might be the hand and shoulders, right? So here should be more or less straightforward action, right to resistance, right to the potential neckline, but market suddenly has stopped somewhere in between this upward action and now is turning down without any significant reasons, because the 618 level that we have mentioned yesterday, it's already has been broken with this action. But surprisingly, market just stops and dropped right below it once again. This really put some shadow on a bullish context, so it is a bad sign for the bullish performance. Also, let's check whether we will get 30% retracement already or not. This is important for for double repo pattern. So take a look that market hasn't quite reached yet the 30% level, and that is necessary condition for double repo pattern. With this retracement between the bottoms, market should not reach the 30% level. So from that standpoint, everything stands good. Now, in the nearest few hours, maybe today, we need to keep an eye on this action. So preferably, if we will not get the grabber here, if we will get the grabber, it means that market still could try to reach the neckline. And if we will get the grabber, do not take the short position. Conversely, if we will not get it, the market drop below the MACD, trend will turn bearish. In this case, you could consider taking the short position if you would like to, because take a look what's going on the hourly chart. That's the resistance that we discussed yesterday. So a few hours later, it has been broken up, And for bulls, it was, well, very, very good performance. But take a look at what's going on right now. Market is returning right back down. In a consolidation, breaking the neckline down once again, dropping below the 618 resistance that was here, and it's keep going lower. This is bad sign. And by my view is that more chances that we will get downward continuation here. Let's keep watching. So once we will see that grabber is not formed, in this case we could consider taking the short position. If we'll get the grabber, well, it's better to do nothing. And if you trade gold on intraday charts, maybe if you're a scalp trader, you could consider taking the long position. If the appearing of the grabber will be enough context for taking the long position. But somehow I suggest that, well, just based on this stuff, I suppose that in the current circumstances, downside continuation seems more probable.